Intel is the largest producer of microchips in the United States, and its stock has been dropping massively over the past year, and it is now down more than 50% from its all-time highs. This has caused many investors to ask if Intel is a value stock or a value trap now. In today's video, we are going to analyze Intel stock and answer this question. Is Intel a buy or should investors be avoiding it? Alright, so the first thing that we're going to do is go and take a look at Intel's financials here. And I want to take a look at Intel's revenue because the revenue has been dropping quite significantly over the past couple of quarters. If we take a look at the trailing 12 months and zoom out to about 2012, we can see that since the fourth quarter of 2021, the stocks or the company's revenue has been dropping. If we take a look on a quarterly basis, we can see that over the past 2 quarters, Intel's revenue has really dropped. It's a significant amount. And in the most recent quarter, the company has now produced about $15.3 billion in revenue. And if we go back throughout history, the last time that Intel has produced about $15 billion in second quarter revenue was all the way back here in 2017 when they did about $14.8 billion in revenue. So in the last quarter, the company's revenue fell to essentially a 5-year low. And this is partly why the stock is down so massively. Also, if we go and take a look at Intel's operating cash flow, we can see that the operating cash flow last quarter was only $809 million. So the company's operations almost lost money in the last quarter, and the operating cash flow is just dropping significantly as well. If we scroll down here and take a look at Intel's free cash flow, in the trailing 12 months, the company now has negative free cash flow. So it's had a cash outflow of about $1.6 billion. And if we take a look at the quarterly, the last few quarters free cash flow for Intel have not been that great. And this is because the company is spending tens of billions of dollars on higher capital expenditures at the same time as the company's operating cash flow is declining and going down along with the revenue. So the company essentially is just not in the best place fundamentally or financially, and it looks like the business is kind of just seeing a decline right now. This is why the stock is also down 50% from its all-time highs and is really just continuing to come down. Now, I took a screenshot from Intel's most recent financial reporting here, and this is their client computing group. And we can see that their client computing segment of the business is down 25% year over year. And they said that there is a lower revenue on PC demand softening as consumer and education demand is dropping. This is the same story as Intel's data center revenue. It's down about 16%, but the company says that their data center revenue is down on competitive pressures. So essentially they're seeing an increase in competition, and this is causing the company to see a decline in revenue and ultimately profitability as well. What's interesting about this is I went over to AMD's second quarter 2022 financial results to take a look at their presentation, and their data center revenue is up 83% year over year. And they're capturing clients like Microsoft Azure, and AMD now has Google Cloud as their client as well. AMD is stealing a lot of market share, and they're stealing key clients from Intel. And this is exactly why AMD's data center revenue is up 83% year over year, whereas Intel's is down 16%. This is the exact same story with what's happening to Intel in its overall computing segment, and really in multiple different segments of Intel's business. It's seeing a decrease in market share and an increase in competition, and AMD is really taking a lot of Intel's overall market share and clients now. So what we're going to do is head over to Intel's Stock Unlock Insights, and I want to take a look at what Stock Unlock has to say about Intel's business here. So the dividends have a dividend score of 4.3 out of 5, which is pretty good. The dividend yield right now of 4.5%-ish is above the 5-year average of 2.9%. So Intel's dividend yield right now is rather high because the stock is falling so much. The dividend per share has also increased by about 5% over the past year, so they are increasing the dividend. Over the past 5 years, dividends have been growing, and the payout ratio is only about 30%. So the payout ratio does look pretty solid still. Now, if we take a look at the growth score though, it's only a 3.0 out of 5, which is like average. It's not amazing. It's not overly bad though. We can see that the revenue is down in the trailing 12 months by 5% year over year. Net income only grew by about 3%, Free cash flow is down 110%. This is because the company's free cash flow was positive last year, and now in the trailing 12 months, it is negative, so it's declined by more than 100%. Book value and tangible book value are increasing though, and the book value and tangible book value increasing is why the growth score isn't lower than 3. Now, if we move on to profitability, Intel has a profitability score of 2.5. Gross margin is average at 15%, operating margin is 17%, net margin is 26%, which is interesting. Free cash flow margin is negative now, cash conversion is 0%. So essentially none of the net income or the earnings is actual cash flow for the business. It's all non-cash earnings, which is why this is very bad. Also free cash flow negative, which is bad. So the profitability score is only 2.5 right now as the company's profitability is going down the toilet. If we take a look at financial health, it's a 3.0 out of 5. Current ratio is 1.86 average. The company doesn't have a lot of intangible assets, so that's average. The shares have increased slightly year over year, but not by much, so that's average. And the debt to EBITDA ratio is 1.4. So the financial health of this business is just kind of average. There's nothing amazing, but there's no real red flags either. Now on the returns, we got a 3.5 out of 5 because the company has a strong return on equity and a strong return on assets. ROIC and ROCE are kind of just average though. So when I take a look at Intel, what I'm seeing is a company with decent financials, with slowing growth, and it's not very profitable because the free cash flow is declining right now. But when you take a look at the dividends do look strong still. The dividend yield right now is well above its 5-year average, and the dividends are still increasing. So that is very interesting to see. So yeah, that's kind of what Stock Unlock tells us here. But now what I want to do is compare Intel with another major chip producer, which is TSM or Taiwan Semiconductor. TSM is another stock that has been getting hit in the market, not really because the fundamentals have been declining, but because there is a lot of tension over Taiwan right now with China, and like there's kind of like a standoff around Taiwan. So investors are fleeing Taiwan, which is causing TSM's stock to drop. However, when we take a look at the comparison here on our Stock Unlock insights, we can see that TSM has a much better growth score. It's literally a perfect 5 out of 5. The revenue is increasing by nearly 30%, net income grew by 38%, free cash flow by nearly 100%, and book value and tangible book value are both increasing by over 25%. So TSM literally knocks growth out of the park. It's a perfect 5.0. This business is seeing strong growth. Now, what's also interesting about this is TSM and AMD are seeing very strong growth right now, whereas Intel is seeing its revenue and its other areas of the business decline. So that is a very clear difference between Intel, TSM, and AMD. And that clearly tells us that Intel is losing market share from these other chip providers. If we scroll down, we can see that TSM does have a better financial health score as well. Analysts seem much more bullish on the company. The dividend score isn't quite as high because Intel does pay a much higher dividend right now, and TSM isn't really that much of a dividend company. They do pay a dividend, but it's not that much. Now, also, the profitability of TSM is a 4.6 out of 5, which is very good, okay? So the gross margin is higher than Intel, so they're producing their chips for, they're not spending as much money to produce and deliver their chips. They have higher margins. The operating margin is significantly higher. The net margin is higher. The free cash flow margin is much, much higher. And the cash conversion is about 65%. TSM's net income and its earnings is actual cash flow for the business, which is good to see. So this business is actually bringing in cash. When we take a look at the returns, it's a 4.8 out of 5. ROIC is much higher at 35%. ROCE is much higher at 24%. Return on equity is better, and return on assets is better as well. So when I compare Intel versus TSM here on Stock Unlock, it's honestly not even close right now, you guys. Honestly, like TSM, in terms of fundamentals, looks much, 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 much better than Intel. If there wasn't this whole, tension over Taiwan right now, I would probably be buying TSM because it does look like a very fundamentally sound business and it's just growing incredibly well. So now what we're going to do is head over to our freeform tool, and what we're going to add in TSM, and we're also going to add in AMD, and we're basically just going to quickly compare the fundamental growth of these businesses against one another. And we're going to take a look at the past decade. The first metric that I want to take a look at is simply these businesses' revenue growth. And we can very clearly see here that Intel is bringing in the most revenue, so it is the largest company in terms of revenue, but it's the only company here where the revenue is declining. And we can see that in the trailing 12 months, it's a very clear that, Intel is the only business here where the revenue is going down. I don't really know How else to say that, right? So now let's take a look at these businesses' gross profits and see if this is kind of the same story. And it is. Intel's gross profits are going down, whereas TSM and AMD's gross profits are continuing to go up. So let's see if this is the same story with these businesses' operating income. This is a very clear difference. So AMD, the bottom line here, their operating income is kind of just flatlining. Intel's operating income is absolutely collapsing right now, and TSM's operating income is continuing to rally higher and increase. So now let's take a look at operating cash flow. We can see this is the exact same story. TSM and AMD's operating cash flow continuing to grow. Intel's operating cash flow is going down the toilet. Now let's take a look at CapEx, or capital expenditures. And what's interesting about this, a few interesting things here in the CapEx chart. Number one, TSM is actually spending more than Intel on CapEx, but Intel and TSM are both spending tens of billions of dollars on CapEx right now. So what I believe is going on here is these businesses are trying to expand, build out more factories, build out more capacity to try and fix the global chip shortage right now and meet the growing demand of chips and semiconductors around the world. But what's also interesting is AMD's CapEx spend versus these other companies is ridiculously low. I mean, take a look at this. AMD's CapEx spend in the trailing 12 months was only $374 million versus Intel's $21 billion and TSM's $30 billion in CapEx. So AMD has like much lower CapEx. It's a very efficient business in terms of capital expenditures. And take a look at this. AMD still has $3 billion in free cash flow, which is like 1/5 of TSM's free cash flow, but it has like 1% of TSM's capital expenditures. So AMD, at least when I take a look at these charts, looks incredibly lean, incredibly efficient, and it's just a cash flow machine. Outside of that, we can see that TSM's free cash flow is still managing to grow despite the company spending so much money on CapEx right now. Whereas on the contrary, we can see that Intel's free cash flow is now negative and the company isn't spending as much as TSM on CapEx. So TSM overall looks like a much more fundamentally sound business, and AMD looks like the most lean and efficient business that is also growing the quickest. So now what I'm going to do is I'm going to take out AMD and TSM, and I want to show you guys this chart right here because I thought that this was kind of interesting as well. Let's take a look at Intel's operating cash flow and its stock price over time. And we can see that Intel's stock price tends to follow its operating cash flow. We can see, well, it's just very clear here that this is what's happening with the stock, and that's kind of the metric that the stock likes to follow. What this also means is that if Intel can get its operating cash flow back and continue growing in the future, then there is a high probability that this stock will continue going up. Now, personally, I just don't know if Intel is going to grow its operating cash flow in the future when it's seeing, margins decline. It's seeing profitability decline on basically every front. You got your gross margin, operating margin, net margin, and free cash flow margin all declining right now. Even operating cash flow margins going down. So this business's profitability is going down with its revenues, and everything is just kind of declining. And it's seeing increased competition from its competitors, and its competitors are growing very quickly and stealing key clients like Azure and Google Cloud. So I am just not totally optimistic that Intel's operating cash flow is going to come back in the future. If it's going to stay down like this, if it's going to continue declining, or what, I just don't know. Now, let's take a look at Intel's price to operating cash flow, okay? And over the past decade. And we can see that the price to operating cash flow right now is about 5.9. And we can see here that the average over the past 10 years has been about 7.23. So Intel's price to operating cash flow right now is well below its average. And this is why a lot of people are saying, this stock is looking very cheap right now. Also, the dividend yield is very high. So a lot of dividend income investors are buying Intel. And a lot of people are just saying, this stock looks very cheap. And fair enough, honestly. When you take a look at the price ratios, it does look quite cheap. The last time Intel stock got to about this price ratio in terms of operating cash flow was near the end of 2012, okay? So keep that in mind. Near the end of 2012, at the beginning of 2013, Intel's price to operating cash flow was about 5.5. So let's head back over here to Intel's stock chart. And we can see that right here at the end of 2012, Intel's stock was falling. It essentially fell from, April of 2012 down to November of 2012. It fell about 27%. So Intel saw this massive correction at the end of 2012, at the beginning of 2013. But you can see that since then, the bottom there, the pit there to the peak in 2021, the stock was up 243%. So the stock came back strong and it rallied very strong over the next like 8 years. This is because Intel, the underlying fundamentals of the business recovered. The business's operating cash flow continued increasing. And as the operating cash flow increased, so did the stock price, because the stock price tends to follow operating cash flow for Intel. Now, again, what this suggests is that if Intel can get its operating cash flow back into growth mode and turn the business around once again, then the stock price could potentially follow. Again, with all of the factors that we talked about, with the rising competition, with the margins going down, with the increased capex, I just don't know if this business's profits, operating cash flow, revenue, and everything is going to come back. That's really the main question that we have to ask ourselves as investors is, do we think that this business can turn around and fend off the competition and start gaining market share back in those key industries? Now, also, I found this screenshot on Intel's most recent investor presentation, and this is their fiscal year 2022 outlook. And they're saying that they're essentially expecting $65 to $68 billion in revenue for this year, which is about 66 billion-ish if you want to go to the middle. Now, if we head back over to Intel's financials here on Stock Unlock and we go over to the yearly income statement, and let's just zoom out quite a bit, okay? We can see that the last time that Intel produced around $66 billion in revenue was about in 2017, which tells me that Intel is going to lose about 5 years of revenue growth this year. That's what the company is projecting. So the company is essentially going back 5 years in time, and the growth is just going down. And I don't know if this trend is going to continue. And think about this as well. Intel is spending tens of billions of dollars in capex right now. They're sacrificing profitability essentially to do that, but the revenue is still declining. So you're also betting that the company's capital expenditures, increased capex, is going to translate into increased revenue and fundamental growth in the future. And as I said, I just don't know if that's going to happen. For me personally, as an investor, I am not going to be buying Intel in this dip right now, because I think that being confident in your positions is one of the most important things as an investor. Because for me personally, if I bought Intel right now at $32 a share, let's say, and I'm not confident in this business's future, if the stock drops down to about $25 or even $20, I'm probably going to get freaked out, because again, I'm not confident in this position. This is a question that I like to ask myself. If this stock drops 50% on me, am I going to see that as an opportunity, or am I going to get uncomfortable and make an emotional decision and sell out of it? And with Intel, when I ask myself that question, if Intel dropped 50% on me, I wouldn't know if the fundamentals are going to be okay, and I wouldn't feel confident in that position, and I would probably just cut it, which would then mean that I am succumbing to price volatility, which removes my edge as an investor. So if you are going to be investing in Intel, I'm not saying that you should or shouldn't, because I'm not a financial advisor, but a question that you can ask yourself is, if Intel stock were to drop 50% again from where it is today, would you see that as an opportunity, or would you get scared and would you want to sell your position? Consider that one before you buy any stock, and especially before you buy Intel right now. But that's kind of just what I am seeing using our Stock Unlock platform right here, and just going through my basic research steps and just showing you guys what my thoughts are with this business. If you guys like Stock Unlock and you want a 14-day free trial, there will be a link at the top of the description. This is a fantastic platform, and it's getting better literally every single day. We're working incredibly hard to make it better. We just released the dividends tab. I didn't use it in this video, but the dividends tab is brand new, and we're working on a very in-depth portfolio tracker that's probably going to be the best portfolio tracker on the internet. Well, my freaking goal is to make it the best portfolio tracker on the internet, because I think that there's not a lot of good portfolio trackers out there. I think that, we can make a really great one here on Stock Unlock. So stay tuned for that, and get your 14-day free trial using the link at the top of the description. Also, let me know what you guys think about Intel down in the comment section below. And if you enjoyed this kind of video, then please remember to leave a like on it, and let me know what stocks you guys want me to take a look at next, because I'm planning on analyzing a bunch of different stocks for you guys and just letting you know what my thoughts are and using Stock Unlock to back up my conclusions. But yeah, that's going to wrap up the video, everyone. So thank you so much for watching. I truly do appreciate it, and I really hope to see you all again in our next one.